Ladies and gentlemen, we're going to go ahead and get this workshop started. This is our audit. I'll go ahead and turn it over to our auditors. It's 4:30. This will end at 5. So please hit the high points. Our agenda is 2.1, finance review of audit results and presentation of the 2023-2024 annual comprehensive financial report by external auditor Brad Colder of the Colder, Slavin and Company, LLC. Mr. Dugan and Mr. Mouton are part of our finance department. If y'all don't have anything, I'll go ahead and let Mr. Colder take over.
Good to go? Okay. Good afternoon, board, superintendent, public. We're here to present, as Britt just indicated, the financial results for the year ended June 30, 2024. I'm going to go ahead and begin and go through the general fund, look at the revenues, expenditures, make some analogies there, and then we'll move into and conclude the meeting with a discussion of the findings. I think there may be some questions the board has about some of those. I want to make sure we have time to address all those. So, with that brief introduction out the way, why don't we get to page 1 of the supplemental report. And on page 1, this is the revenues of the general fund, okay? And so you have parish sources and state sources. You have your final amended budget on the far left side. Next to that is your actual audited number. Then the variance from your final budget. And on the far right column is your actual audited 2023 number. The main parish sources, as you can see, ad valorem taxes or property taxes, $92.6 million this year, up last year, and it was $85.3. So a nice healthy increase in the ad valorem taxes. Sales taxes, a modest increase, $100 million in the current year compared to $98.9 million in the prior year. So a little bit of an increase, but nothing huge. And then interest on interest-bearing deposits, $7.6 million this year compared to $4.4 million last year. So decent increases among those three categories, which comprise most of the total parish sources, as you can see, of $202 million. That's an increase of approximately $12 million year over year when your total parish revenues were $190 million. So an increase of about $12 million. Then we get to the state sources. The majority of this, as you can see, is that very first line item, the State Public School Fund, a lot of this being the MFP, or the Minimum Foundation Program. You can see $152.6 million brought in this year, and that's down from last year, and it was almost $158 million. Remember last year you had about an $8 million stipend that was included in this particular line item. That's a lot of the reason, or the reason, for the decrease from 23 to 24. I'd like to direct your attention, if I could, to right above the total for state sources is the line Other, okay? And you can see $9.6 million in 24 compared to $59,000 last year, an increase of $9.6 million. We had a $9.5 million state stipend at that line item. So last year, that $8.8 million stipend was in the State Public School Fund line item. This year, it's in Other. All that to say, total state sources, in total, $164 million this year, up $4 million when last year was $160 million. So a lot of verbiage to say state sources increased about $4 million year over year. Total revenues for the general fund, 2024, $367 million. That's an increase of $17 million over last year when total revenues for the general fund came in at $350 million. That's what I have to say about the revenues, unless there's any questions here. No questions. Pages 2 through 8 are the details of the different program expenses within the general fund. I don't think it's a valuable use of time to spend a lot of time here. The main reason for some of the variances or differences between the program in 24-23, that $9.5 million stipend we talked about was mainly used for salaries and related benefits. So any type of variances you have in the programs are generally due to programs with salary and benefit differences. So with that being said, let's go to page 9, please. Page 9. And page 9 is a summary of the entire general fund, both the revenues and the expenditures. You have your original and final budget on the far left two columns. The middle column is your actual 24 audited numbers, then the variance from the final budget. And on the far right side is your actual 2023 audited numbers. We went over the revenues. That's the top third of the page. As I said, $367 million this year, up over last year was $350. Then you get toward the middle of the page. That's the different programs for the expenditures of the general fund, all detailed out. I don't want to go through the detail of these for the sake of time, but in total, that bottom third of the page, total expenditures were budgeted to be $334 million, came in at $323 million. That's about a $21 million increase over last year, and was approximately $302 million. So about $21 million increase in your expenditures in the general fund. The excess of revenues over expenditures, $43.9 million in 2024 compared to last year at $48.6. So give or take a $4 million decrease in your excess of revenues over expenditures. There's a lot of transfers that go in and out of, mostly out of the general fund, as you can see. A net transfer out this year of $36 million, a net transfer out last year of $44 million. Left with the third to line, last line, the excess of revenues after your transfers of almost $7.2 million. Last year was 4.3, ending with a fund balance of $83.6 million, up about $7 million year over year. Let's remember that $83.6 million if we could. And if there's no questions on page 9, I'll keep moving. And let's take a look at page 10. Page 10 is simply to show the board the economic stabilization and the percentage. You guys have a 75-day policy, and that you are in fact meeting it. As I said, the $83.6 million that you had in fund balance, you're required by board policy to have at least 69.2. You do have that. That's what the page is here. Page 10 is to show the board that you are in fact in compliance with your policy to have 75 days of emergency funds, another way to say stabilization fund. Any questions on page 10? Okay. With that being said, let's go ahead and take a look at page 11. Page 11 is a breakdown of a 4-year period looking at the expenditures by type and percentage within the general fund. And what I'd like to kind of look at first is your total for personnel expenditures, and we have 21 through 24. So you look at where we were back in 21, $220 million, or almost 80% of the total expenditures in the general fund. In 2022, the salaries increased slightly to $222 million, but the percentage of the expenditures went down to 78%. June of 23, up in the salaries to $233 million, but again, that percentage of the expenditures in the general fund goes down to 77%. And then in the current year, salaries do increase a decent amount to $244 million. But again, we're down in that percentage of general fund expenditures to 75%. So there's a downward trend in the amount of money you can spend in the general fund on salaries. The next section is other expenditures, and we have 7 different categories laid out for you. Most of these 6 categories don't have a tremendous amount of movement or variance from year to year, with the exception of one line item. And I say this every year, but I have to say it because it is such a large expenditure for this school board. And it is the 6th one listed. It's appropriation to charter schools. It's the largest of the expenditures in this particular section. This year, $32.5 million, or 10% of your general fund expenditures were spent on charter schools. Last year was $23.5 million, or 7.8%. Back in 22, $19.3 million, or 6.8%. And all the way back in 21, it was less than half of what it is this year at $15.9 million, or 5.7%. So I'm bringing this one up to point out, not only is it something you guys are aware of as potentially being a problem, but the increase you've seen in your appropriation to charter schools is directly related to the amount of money you can spend on your own personnel salaries and related benefits within this general fund. It's a comment I make every year, but it's a comment that's worth pointing out. Any questions on page 11? No questions. With that being said, let's flip to page 12. Page 12 is a self-insurance fund. I came here, I want to say it was October, November last year. We had a meeting. I was here for part of the meeting. I think the meeting was quite a lengthy one. And some changes were made to how we're charging and revenues that were going into the self-insurance because it was identified as a problem. And this statement is going to show that the move that you guys made was necessary. Looking at charges for services, $65.9 million in 23, up about $4 million to $69.9 million in the current year. So a reasonable increase, I would say, in the charge for services. Remember, 70% of this number is paid for by the general fund, 30% by your retirees and active employees. Then we move on to the operating expenditures. This is comprised of your contractual services, premium payments, claim payments, and other operating expenses. In total, $68 million spent in 2023, up to $78.8 million in 2024. The main driver of the increase in this section is your claim payments. Those are up approximately $10 million. In total, you can see the expenditures in this section up about 10.8. So over 90% of the reason for the increase is claim payments, and these have continued to trend upward over the past few years. You can see you're left with an operating loss, a shade over $2 million last year, and right under $9 million in 2024, about a $7 million increase in the operating loss. As we discussed late last year, you guys did transfer $6.6 million during the fiscal 2024 to supplement that huge loss of $9 million, because if you look at the very last line on the page, it's net position ending without the OPEB. So we take out the OPEB factor because it is such a large and somewhat difficult thing to wrap your head around because it's actuarially computed in most cases. But you can see, last year the fund balance without any transfer from the general fund, $4.3 million. You guys transferred $6.6 million during this fiscal year and ended with a fund balance of $2.2 million. So without that general fund transfer, you would have had a deficiency, not even factoring in the OPEB, of over $4 million. So the transfer was necessary that you guys did that.
Claim payments, does that include prescription and, regular claim payments, or is prescription shown somewhere else in this list?
It includes both.
It includes both. Thank you.
Any other questions or comments on page 12, self-insurance fund? None. Okay.
We're going to need to we have 20 minutes before the board meeting, so the recommendation, the findings, let's get right into
Let's
it.
do it. Okay. With that being said, Superintendent, let's go to page 13. Finding number 1, I don't want to spend a tremendous amount of time here unless you guys would like to. This is the school activity funds. We evaluate 11 schools, takes in about $11.5 million. I would just point you to the last 4 sentences in the corrective action. That is the corrective action taken for 2024. And you can see in 2024, a new school accounting software was implemented. Historically, collecting and maintaining receipts was an issue across the district, and now all receipts are generated electronically. Creating and maintaining classroom rosters for fee purposes is now generated automatically in the software. Statements and reports can be generated for fees and fundraisers. As it stands now, because of the electronic nature of which you guys are going to here, class fees are mostly getting solved. It's the fundraisers and the sporting events that remain an issue as it relates to this finding. That's your main issue here.
Board members, let me stop right here. First of all, I want all of you to know that this report has been given to both me and my senior level group prior to actually getting here. And what I'd like to also address, and if you guys can all go to under findings, and I want to read this to you and I want you to pay attention to the words. Policies and procedures regarding collection of monies for various fundraisers and activities in school activity funds at the individual schools are not being enforced by the principals. We have 46 principals in this school district. I've asked Mr. Brad, and I've asked him to clarify the samples that you're referencing and making sure that something like this, which is going to be a public document, does not put principals in this particular category, because when people look at this, it says it's not being enforced by principals. That's one of the things that I brought to your attention. Your firm chose not to change that.
When you say change it, change the report?
Change the wording that would be inclusive of the specifics of what your sample was involving, that does not lean itself to where it includes all principals, because when I read this, it puts a lot of principals in here that should not be in here.
That comment that you made to me was give or take February. This report was issued in December of 2024, so I cannot go back and change the report for a recommendation made 2 months after the report's already a public document.
I have a question. When I met with you, I did ask the same question, is this all? And you said it was specific. And I had asked, why can't we point out exactly who's making the error here? And you said you just take a small sampling. So, I did bring it up to you when we spoke. So, the way it's worded now, it sounds like every single principal has not been compliant. So I think that's the only discrepancy here. We would prefer that it's notated that, it's not everyone.
No, and I can speak to it specifically here. You have 46 schools, as you indicated. We test 11 schools, okay? Of those 11 schools, my recollection is about 3 or 4 of them are driving a particular year's findings. The problem is that from year to year, those schools change. because principals change, individuals employed at the school change that are doing these policies and implementing them or not. And so it was always previously that we would not name schools to call out principals, and that's what we have continued to do. The change in the administration has desired a change in the way we write the finding. We can accommodate that, but I would need to know that before the finding, the report and the findings are public. And so I was not aware of a change that was desired until 2025. As I said, this report was issued in late December 2024.
Again, I want to reference that what Ms. Mason is referencing is that what you just stated, there were 11 schools and only 3 people are driving this particular statement. Why couldn't we not have stated that is what I'm saying. I'm going to get into more, but again, we can move on to the next finding. But again, I'm very protective of people who are doing a good job. I don't want to blanket and just say we have bad schools. No, we may have 2 or 3. What I'm saying is we need to be very specific so that our principals and the public don't look at Lafayette Parish as not following these different things in their specific schools. And I stated that to you.
If I may, is there a reason why we can't, the number 11 isn't in here anywhere, that you audited 11 schools? In fact, it sounds like you did 35 audits and all other schools were audited, and then you extrapolate, or you got all that information. But really what you did was 11 schools and you extrapolated across the board. Why can't it be at least an asterisk or a footnote that says we only actually audited 11 schools personally and we extrapolated the information, so that it's clear that this is not a blanket statement. This is a small sampling of the 40, not even a fourth of the schools that we have.
We were previously engaged a couple of 2 or 3 years ago. We would do half the schools. We'd do 23. And that was changed in the past 2 or 3 years to do 11. And the school board itself, internally, with Lee and her department, does the other schools. And then we kind of combine our testing along with Leah's testing to arrive at ratings, basically grades for each school. Those combined grades result in this finding here. So we individually test 11 schools currently. We previously tested 23 schools. In fiscal year 24, to be clear, we tested 11. Of those 11, 3 or 4 schools are driving the finding. And that's typical each year.
Okay, let's move to the next finding.
Fair enough. On page 14, we get to the, I'll just read the finding. The school board is required to comply with Louisiana revised statute, and we give the statute another way to put this. This is the Louisiana Budget Act, which states that the budget should be amended with total revenue and other sources within a fund or failing to meet total budgeted revenues and other sources by 5% or more. The school board should implement policies and procedures to ensure compliance with the statute, and we go ahead and list the statute. It was a special revenue fund that was the issue. It wasn't amended properly, and it resulted in the finding. Not a whole lot more to say. This is not a typical finding you guys have. You have until September 15th to amend your June 30th budget. So it's very uncommon to have a finding in this area. I'd be surprised to see this one again. Any questions about finding number 5 in this case? None, okay. Looking at number 6, this is the school board is required to comply with Louisiana Revised Statute 24515. Another way to look at this, records of general fixed assets is mainly what we're concentrating on here, which states that a list shall be maintained of all land, buildings, improvements other than buildings, equipment, and other general fixed assets. The record shall include documentation of dispositions. The school board did not have internal control policies and procedures in place to ensure compliance. The corrective action is fairly extensive, detailing out the process you guys have. I'm open to comment or answer any questions that we have about this one. I'm not seeing any green lights, I'm moving. Then we get to number 7. There were inadequate controls in place to ensure that the school board complied with Louisiana Revised Statute 382211, another way to put this, Louisiana Public Bid Law. The school board had a contract for an elevator upgrade project that was greater than $250,000. The project was not properly bid. The school board also had 4 instances where projects were performed at various locations and not aggregated together. Therefore, quotes were obtained for the projects instead of the projects being properly procured using bids. The school board should implement policies and procedures to ensure compliance. And then there's a corrective action that mostly addresses the elevator situation with a final sentence saying that going forward, similar types of projects may be bid out unless circumstances warrant a different process. So I'll open the floor to questions here, and I imagine I'm going to see some lights, yeah.
Questions? All right. So on the elevator upgrade project, so when I originally saw the audit report and I went and I said, well, was it an elevator upgrade project or was it a service project? Or what are we, is it an upgrade project or was it a service contract project? Like how are we classifying that? Because there's two different ways to handle that in the bidding process.
My understanding was to repair. It's the elevator in this building, in fact. It was not operational, and it needed to be repaired in order to be operational. Had it been a maintenance contract where it was a fully operational elevator, and it's like, well, let's do routine maintenance like you might do in your HVAC system at home, would not have needed to be bidded out, obviously. That would be a maintenance contract and not subject to bid. In this case, it was largely a repair, and because of that, we felt as though it should have been bid out.
Okay. So can I call Robert up to?
They both work or not? Okay.
All right. So explain to me that project, right? Because
This project was before I was, this was before I was here.
Okay.
So this project was run by the guy that was in my position before I was here, so it's not one that I'm familiar with at all. It was started and almost finished before I came in.
So what was?
So
What was the project?
So when I came in, they were kind of at the end of this project. From our understanding, it was just doing some repairs to make it work. Changed, I think, the belt or the loop on it and did some electrical work. It wasn't rebuilding the elevator shaft, doing any of that kind of work. It was more just changing some components, from my understanding.
Okay. Yeah, repair. Yeah. All right. All right. All right. The second part of that finding, right? The projects that weren't bundled, right? In the original report, when I read it, or one of them, there was some, I think there was some actual examples of some project, right? So walk me through what that finding was.
Okay, so let me get this one if you don't mind. So as you're pointing out, we referenced the elevator and we referenced 4 other projects. The elevator was not an aggregation issue. It was just something we felt as though it should have been bid. The others were multiple different things that were quoted. We felt as though should have been aggregated and then therefore bid out. So for example, I can give you a few examples if you'd like.
Yeah.
Sure, let's do it. One of them was scoreboards. You had 4 scoreboards implemented or installed at Northside High, Karen Crow High, Como High, and Acadiana High.
Okay.
It was to install scoreboards at these 4 different schools. You received quotes on all of them. The winning quote on the ones at Northside, Karen Crow, and Como, all were $199,999, awarded to Daktronics within a few months of each other. The one at Northside and Karen Crow within a few days of each other. Como a bit later than that in early January. We went through these quotes very specifically, very tediously. As I want to point out, Northside, Karen Crow, and Como were identical quotes. Not only in the price, but when you go through and look at them, they were identical when you go line by line. Every single thing was the exact same. Acadiana High was a bit different. That one came in at $188,582, and the winner of that contract was, I believe it's pronounced Show Boss. I'm not familiar with the company. And that quote was obtained in August of 23.
Okay.
So all 4 of these occurred during this fiscal year. The scope, as we appreciated, is to install scoreboards at high schools, all funded by the same funding source, Fund 45, self-funded construction, and 3 of the 4 had the same contractor win the bid, which was Daktronics, on the exact same quotes for Northside, Karen Crow, and Como. And for those reasons, we felt as though these should have been bid as one larger scoreboard project rather than separated into 4 quoted projects.
Okay.
Keep going. Okay. The next one that comprises the 4 is carpet was replaced at 3 different schools in the district. Let's see here. The 3 schools, Charles Burke Elementary, Live Oak Elementary, and David Thibodeau. In the case of Charles Burke Elementary and Live Oak Elementary, here again, similar to what we dealt with on the scoreboards, were identical quotes. That may seem odd, and we think it is odd, to have identical quotes of $229,750.94. I mean, to the penny, the exact same quote was the winning quote on both. Cornerstone Flooring was the winner of all 3 of these schools that I just mentioned. Charles Burke and Live Oak, those quotes was obtained on February 19th for Charles Burke and February 21st for Live Oak, so within 2 days of each other. David Thibodeau, was about a month later, And Cornerstone, again, was the winning bid there at approximately $226,398.50. So a bit below the previous two schools. We felt that, again, here, you have two identical quotes. Everything about it was the exact same, down to the penny. David Thibodeau was at a few $1,000s, and the timing of this was all within, let's call it 30 to 35 days. So scope is the same, timing was the same, funding source is the same, contractor was the same. To us, this is one larger carpeting project, not three separate projects that should be quoted. It should have been bid out.
So, so for the scoreboard, it's the exact same scoreboard, right?
Yes, sir.
Okay.
No, Acadiana's was totally different, so I don't know why
But that's why that-
Acadiana's is in your
Yeah.
finding, because that's show boss. That, we have a whole different scoreboard at Acadiana than the other three. That's why that one was done by itself.
No, to be clear, like I said, three of them were the exact same. One was slightly different. And Show Boss was the winner of that. They were not the win. They didn't even bid, oddly enough, on the other three. They were the winner on Acadiana in August and chose to not even bid on the three that happened subsequent to their winning the bid at Acadiana.
Do you know, it was a preference.
Okay?
Acadiana had looked at Show Boss, and they bid. I don't know if Daktronics bid or not.
They did not.
See, Acadiana's the only one that I think considered Show Boss at all, because it is totally different. We have a totally different scoreboard than anybody else.
I want to correct myself if I could, Britt. Daktronics did bid.
Okay.
They did bid.
They didn't
Yeah,
get
was,
it. See, Acadiana's was actually cheaper.
It was cheaper.
Yeah.
Yes, sir. Give or take $11,000, round number. Original quote.
Right.
There was a change orders in a couple of them.
Right. So Acadiana was a good steward of the taxpayers' money. We were cheaper.
If Acadiana happened by itself, there'd have been no issue. It was the other three that were identical, same vendor, same time, same everything, really. That created the problem. Acadiana by itself, in theory, did not, no. And you got the better price. And you got a better price.
Here's the thing, like, so I've been reading CAFRs for years, right? Like LCGs and everyone else. And I never ran across this before, as far as I've read them, so I was digging. And on the Louisiana, the Legislative Auditor's website, they have a whole section about can you split projects or not, right? So it says, hey, division or splitting of public work projects into smaller projects for the purpose of avoiding the advertisement and letting a contract for bid is prohibited under RS 3822-12, Section V. Therefore, for all the continuous parts of a single project, public work should be bid out as a single bid. But then the next part says, the AG has noted that if the separation of projects or purposes is done for legitimate business reasons, it is not done for the purpose of avoiding the bidding project. So if we're doing this just to avoid the bidding process, that would be in violation. It says that such separation of projects shall be permissible under AG opinion number 080067, AG opinion number 00246, right? So how do we differentiate between stuff that we could separate and stuff that we can't? Like what law is driving that for us to make that decision? Is it our own, do we make that decision? And then is there any guidelines we should follow?
Let me interject something. First of all, I think our attorneys are advising us on this.
Well,
But I get the bundle, and I'm going to use an example, and I hope I get people mad. I hope I get them real mad. Because we bundled wings at Judy Middle, Acadiana High, and LG Alamo. And we got contractors, attorneys, and engineers that about lost their mind because we did what? We bundled. So from where I'm sitting, somebody tell us what we're supposed to do. We're not attempting to break any laws. We're going to put up a slide, Ms. Gardner. Can you put it up? Yes, sir. We're going to show you from past administration to this administration how we've been better stewards of the taxpayers' money. There's something going on in Washington. Well, there's something going on in Lafayette Parish, too. We're tired of having our money wasted. So I want you to look up there and see the projects that were bid with architects, with specs compared to quotes, and look at the price differences. People, we've gotten hammered for supposedly breaking something when all we're trying to do is not do it the way it was done for 20 years, get an architect, get a bid, and we pay $100 and something thousand more for the same thing. I mean, I think that's what we're getting at. So we don't bundle, we hear it.
that's where I was getting at.
Yeah.
So like,
Sorry,
you have to
Mr.
follow.
Badron.
You're fine. You're fine. I love you. I still love you, Bert. Not as much, but a little bit. So, So that's where my conundrum comes in, because we're supposed to be good stewards of taxpayer dollars. We're supposed to find the best possible product for the best price. But then we also have the laws we have to follow. So if we're too over permissive or too restrictive on our own processes, then we do less projects. I think we've done what? We did, Robert, how many projects did we do last year compared to the year before?
400,
Compared to what before? 120? 60.
60 or 70 a year.
So like, we're trying to balance it. We're trying to be good stewards of taxpayer dollars. We're trying to follow the law to the best of our ability. So, you know, it's a hard process for us to follow if the guidelines coming to us are not clear on what's bundled versus what's not bundled, or what's permissible and what's not permissible. So, I mean, when we talked with the attorneys, they told us that the non-bundling of projects were permissible, but we have an auditor telling us that it's probably a violation. So like, you get our confusion here, right? And our best possible path forward. So I'm just,
And I tell you what, I appreciate Britt's comments and Robert's comments as well, talking about the number of projects that have been completed over the past period of time, because it illustrates, we've been doing this audit for a decent amount of time, and the change in the process here at the school board has been quite the adjustment. Used to have 60 or 70 projects, I think it was just said, now we're doing several hundred. So we're accustomed to seeing it done a certain way. There was a certain process. The process changed radically, quite frankly, and when you're looking at this, it's difficult for us to not apply the bid law as we understand it. Because y'all are not the only government we do. We do quite a bit of governments around the state and have a decent-sized firm and a decent amount of government expertise, and also applying public bid law.
is anybody that you do audits for, are they bundling projects? Are they not bundling projects? How are they handling them different ways?
You know what, this was something we didn't handle lightly, meaning that we did a lot of consultation. We have auditors and CPAs in our firm that have decades of experience. I consulted with all of them in the Lafayette office. Combined, they have over 100 years of experience, and the conclusion was the exact same across the board, that these projects should have been split, they should have been bid, and that would have been in compliance with public bid law. It's not my job to sit here and determine whether you had a cost savings under a previous administration or this administration. I have to come in and test certain projects as a part of doing my audit and say, okay, are they complying with public bid law, yes or no, as I can appreciate it.
Okay.
And the ones that we found, you're not.
And Mr. Robert, about how many projects you think we were able to add with the cost savings out of the 400?
I can tell you. I'll tell you this, we pulled the numbers today, so for those that don't know, I've only been in this position a little over a year. So when I came in, from the time I started up to today, doing the process the way we did, it's a little over $6 million we saved. So the aggregate of savings from each project total, before this way, when we public bid, every project came in at budget or above. When we started doing the quote process, we're coming in way below budget. Over $6 million is what we've put back in the bank.
Yeah, and in the time of budget cuts, I mean, that's pretty dang good, if you ask me.
Hang on one second, ladies and gentlemen, the 5 o'clock meeting will not start on time. Just hang on. Hang on. Ms. Mason, you go ahead.
All right, Mr. Calder, you've been our auditor for several years. Help me understand why, okay, so the first line, north side, 40 by 40, architect and a public bid, $186,499. Then Robert comes in, and we got a 24 by 30 building at Judy's, and it only costs $39,607. It's about $130,000 more to build practically the same thing. So as an auditor, what do you think's going on?
Well, first of all, I haven't had an opportunity to analyze these two particular projects and know the specifications, the materials that went in, the different layouts and everything like that. So to sit here and me make a statement about something I've been looking at for about 45 seconds, I mean, on paper, yeah, it looks like you spent a lot less money. You definitely spent a lot less money, but I can't indicate or express any type of opinion whether that's appropriate or not. I haven't had an opportunity to look at this. The first time I see it.
Okay, well, I will tell you that I was waiting on this Woodvale Pavilion for, I think, 3 years. I see some of our old principals here. 4 years. It ended up costing us $211,018, 50 by 70. And then when Robert came in, we built a 50 by 75 for about 80,000 less? I mean, I don't know.
While you're thinking, Ms. Mason, I want everybody to look at what I was very animated about a while ago, S.J. Montgomery. Built in 2018, architect and bid, $223,210. Current quote for direct contractor would be today, $49,140. Who was wasting your money, people? This is what we're trying to stop. This is what we're trying to do. And you know what? Let the heat come. I'm fine with that. We've saved you a lot of money. His 2018 price would have been $30,000. Let that sink in, please. And when people slam us and call us every name under the book and the whole 9 yards, and we're the ones that got the guts to sit up here and do what we got to do, we're putting together a system to help spend your money a lot better and get a lot more structures, facilities, brick and mortar, security for your kids. Mine's graduating. He's gone. None of this is for me. So please remember, when you hear or you read, get it from the source. We weren't questioned about this. But that's just and I probably spoke more than I should. I know Mr. Edmond and Mr. Hidalgo have something they'd like to say. We'll try not to delay the 5 o'clock meeting because we have some very, very important teachers, students, support staff, teachers of the years that we really want to give them their recognition. That's the fun part.
Mr. Gocho, can you come up? I got a question or two for you, please, sir.
Okay.
The Live Oak job and Charlesburg job, Mr. Bolton said it was close, actually the same price.
Yes, the flooring.
Yeah, isn't the two schools the exact same footprint?
They're pretty similar. I don't know if they're exactly, but they're pretty similar. They're probably 95% the same, I would say.
And what was the savings?
So the original, when I came in, those were being looked at by the previous administration. They were estimating around $600,000 per school to do the flooring. We came in and did it for right around $200,000.
Thank you, sir.
Thank you. My question actually is for you, Mr. Superintendent, or maybe Mr. Hammonds. Despite what the savings may look like on different projects, I mean, our obligation is to follow the law. And I believe that if you have a policy that you don't like or doesn't work for you, you don't break it, you change it. So my question is I have to assume, I have enough faith in you, I have to assume that you've worked through legal on all of these processes. I'd like you to speak to that. If you haven't, speak to that. If you have, speak to that. And I'd also like Mr. Hammonds to weigh in.
First of all, I would just say that Mr. Hammonds has a team of people that we always reference, and depending on the particular areas. And dealing with projects, dealing with contracts, there is a particular person that I can tell you that Robert has full access to, and everything that he is getting as far as whether or not he can proceed or not proceed, he is looking for those to get, advice from. So I can say to you that in a lot of these different things, and for you all to know that when we were given this audit, we had someone from Hammonds and Seals in that meeting. And every one of these different findings were disputed by our attorney. And our attorney basically stated what our reasonings were and gave the justifications to the auditors of why we, or he, gave us permission to move forward. So quickly to say, I will tell you that Mr. Gautreaux gets advice and has access to an attorney every single time, and we are relying on our attorneys to be able to give us advice of whether or not we should proceed, whether it's board policy, state policy.
Mr. Hammonds?
I didn't know if you wanted me to add to that. This is, let me just say this. This is a $500 million a year business. So I've been thinking about that, $500 million a year. And there's no way that every single contract that's been operated or implemented in this school system is reviewed by legal. It's just not possible. And so I'm not here to dispute any of the numbers in this audit. I have no reason to doubt the numbers. I agree completely with Mr. Hidalgo. You have an obligation to follow the law. But let me just say that with regard to every contract that we have reviewed, we feel that the law has been followed. Now, again, we haven't reviewed every single contract, but every one we have reviewed, we have agreed with. And our biggest exception to this particular audit was not the findings of numbers, but the conclusions that this violated the law and this violated the law. And we think that we are just as well, if not better, qualified to determine what constitutes a violation of the public bid law than are the auditors. We don't see any citations of legal authority behind any of those conclusions. And so we, again, question those conclusions. And I'll give one example that was on the screen, no longer on the screen, dealt with a service contract, where the audit concludes, admittedly, this was a services contract. However, a contract for services over $250,000 must be bid according to the law, or words to that effect, because I don't have it on the screen. We disagree with that. The law is clear in the state of Louisiana that a services contract does not have to be bid no matter what the amount of it is. Now, that's not to say that it can't be bid. But that's not the issue. The issue is it illegal to award a services contract without a public bid? And it is not. The audit conclusion says that it is, without any legal authority to support that conclusion. So again, I'm not here to question the numbers. I'm sure that the numbers are accurate, and I understand some of their issues that they're raising about multiple purchases on the same day at the same time. And those are the kind of things that I think need to be looked at. So from that perspective, I think the audit is almost a learning tool where we can take a look at it and we can see if there's anything that needs to be tweaked. But I just want to make sure that the board members are aware that of all the contracts brought to our attention, and we've looked at many of them, we haven't found anything about those contracts that was illegal. Now, whether you got a good deal or you didn't get a good deal, that's not really our perspective. We're not in a position to say that one way or the other. Whether you save money under Mr. Gautreaux or you don't save money under Mr. Gautreaux, as Mr. Hidalgo said, you still have an obligation to follow the law. And to the extent that we think that you're not following the law, we're the first ones to bring it to your attention. As you know, I'm not hesitant to give you my opinion on those kind of issues. And I also have a very good team of lawyers who specialize in this area to advise me as well. So I feel very comfortable in our conclusions in that regard.
If I could have just a brief comment. We did not conclude that the elevator was a service contract, to be clear. We felt as though it was a repair, which is subject to public bid law. So our conclusion was not that the elevator was a service contract. We concluded it was a repair and therefore subject to public bid. I want to make sure that that's on the record. Sure.
The one thing I want to say, I'm going to answer your Charles Burke live oak question and tell you exactly why they were the same price.
Please switch the screen over to the main.
The schools were built at the exact same time.
Mm-hmm.
Exact square footage, everything was exactly the same. So the amount of carpet changed in both were exactly the same. And Charles Burke is one of my schools. So there were 4 schools built: Live Oak, Gallette, J. Wallace, and Burke. And they're all almost identical. So if you do something in one and do it in the other, and it's the exact same project, it's going to be the exact same square footage, the exact amount of tile, and so forth. So we don't have much time. These people have to, we want to honor our people. So you asked for something, Mr. Hammonds?
I wanted to see that audit finding. They talked about the professional service. If you look at the corrective action plan halfway through, the nature of the service appeared to be service-related. But because the project costed more than $250,000, the auditors believe the project should have been bidded out. Again, I read that to say that this is a service-related contract. It is a service contract, which is what it was. Even the line before says, prior staff at the time treated the project as a professional service instead of a public work. This was a professional service contract. They're saying it had to be bid because it was more than $250,000. We dispute that conclusion as a matter of law.
If I could, Mr. Hammonds, the corrective action is not written by me. It's written by management of the school board. So that is not my work or my conclusion, and it's not lacking anything from my firm. I did not draft that corrective action. That was drafted by management. So that's not my conclusion to dispute. In fact, I disagree with the conclusion.
And that, again, is another issue. Is a contract that does repairs to an elevator, is that a public work or is that a professional service? In our opinion, it's a professional service. And if it is a professional service, then it need not be bid. Now, I'm not saying it could not be bid. I'm not saying whether it should or should not be bid. I'm just saying that legally it is not required. And that, to me, is the issue that I have with some of the conclusions in this particular audit. And again, I was not the member of the staff who participated in the conversation, so I'm kind of coming in here a little bit late in that regard. But that is an area that we have looked at repeatedly, not just for this school system, but other systems as well.
And if I could, I'd like to just read something. This was submitted by Mr. Hammond's firm by Evan Alvarez, and we did consider this. And he states in the last page of his December 5th letter, "It is our legal opinion that the public bid law did not require the school board to group together 3 non-identical carpeting jobs located at 3 different separate properties, just because 3 jobs primarily involved carpeting work. The conclusion was they were not identical, but if they were identical, you'd probably have to bid them." That's the conclusion stated in the letter. We just had Britt speak about it. These schools are almost identical or nearly identical. The quotes are identical. It exceeded exceeded $250,000, and they weren't bid. I mean, this is the legal letter we obtained from the firm, interpreted it, applied it, and still found a bid law violation. I'm not sure what else I'm supposed to do.
Okay, it's 5:16. These people were expecting us to entertain them at 5. Can you just wrap it up in a minute, and we'll take about a 2 or 3 minute recess. Those that want to leave, leave. Those that don't, and then board members, we're going to go down on the floor, and Miss Gardner, whose birthday is today. Happy birthday. Will direct us. So take a minute or so, and we're going to go ahead and wrap this up.
I would just like to point out that findings 9 and 10 are regarding vendor suspension and debarment. We didn't find that any were suspended or debarred. You didn't have documentation saying that you checked. And the snack finding is a very minimal finding. You had that last year. And finding number 2024-13 is a duplicate that we have to do for auditing purposes of the finding related to fixed assets. That's the findings in a nutshell right there. But I would like to express my sincere gratitude for our firm's ability to perform the audit for the school board, and express my gratitude that we do appreciate the business of the school board, regardless of these disagreements that we had today. So thank all of you for the time and my time doing this presentation. Thank you.
Thank you. We'll take a minute or so recess. Anybody needs to go anywhere? And then board members, please go down to the floor. Yeah, I will. But that's why I'm doing the recess. I'm about to close this. But just so each and everyone knows, as your board president and the representative District 5, Mr. Gotro and his staff has my 100% support. This workshop is closed. Take a break.